Hello, I'm HomoArrosor. We are sitting right here in July 2026, and we are witnessing a monumental structural shift in the global financial system. The Federal Reserve has just launched 5 brand new task forces, and they are being led directly by external experts. I need to be absolutely clear here. This is not some routine policy review or a minor tweak to the system. The Fed is executing a complete, top-to-bottom overhaul of the United States economic operating system. They are fundamentally retrofitting this colossal macroeconomic machine for the fourth industrial revolution. And as they do this, as they upgrade the entire architecture, they have inadvertently exposed the final, absolute bottleneck for global digital dollarization. That bottleneck is PiVerify. In this explainer, we are going to break down exactly how this entire sequence is unfolding step by step.
Here is the roadmap for our discussion. We will start with the Fed's new OS, then move into the digital dollarization shift. From there, we tackle programmable compliance, breaking the KYC silo, the human on-chain ledger, and finally, we'll see exactly why the fourth industrial revolution is already here.
Section 1. The Fed's new OS. Let's look at how the policy architecture is being upgraded.
The macro trigger has been pulled. The Fed is completely done with the old way of doing things. They are now treating global macroeconomics as a hard-coded engineering system. They are initiating a full-stack rebuild through 5 distinct interconnected task forces. Think of this as rebuilding a computer from the motherboard up. First, you have the input layer. This is the data task force, led by external experts like Doug McMillan. They are entirely abandoning old lagging indicators and shifting strictly to real-time on-chain economic signals. They need data the exact second it happens. Next is the logic layer, handled by the Inflation Framework Task Force. They are recoding how the Fed actually processes inflation, specifically differentiating between AI-driven disinflation, which pushes prices down, versus capital-intensive inflation. Then comes the engine. This is the Productivity and Jobs Task Force. They are literally integrating AI as the foundational driver of economic output. AI productivity is the new baseline. Fourth is execution. The Balance Sheet Task Force is completely redesigning exactly how market liquidity gets injected into the system. And finally, the output interface. The Communication Task Force is transmitting policy directly to algorithmic markets. So you have input, logic, engine, execution, and the UI. This is a complete fourth industrial revolution architectural upgrade.
Section 2. The digital dollarization shift. We need to talk about the actual mechanism of money.
Because the Fed's architecture is totally upgraded, it fundamentally requires a complete paradigm shift in how global money distribution works. The old mechanics are dead. We are moving entirely away from the third industrial revolution's state indirect method. You know the old way. Dollars flowed painstakingly slowly from the Treasury, down to central banks, over to commercial banks, and then finally, maybe days later, to everyday humans. It is entirely too slow. The fourth industrial revolution operates on the direct non-custodial wallet method. This is a massive leap. The United States still maintains total regulatory control over the reserve assets. That doesn't change, but the actual distribution rails are completely outsourced to public blockchains. What does this achieve? It guarantees 24/7, 365 instant settlement. And more importantly, this instant liquidity is accessible directly by verified individuals, by smart contracts, and by artificial intelligence. There are no more middlemen, slowing down the flow of capital.
This direct distribution shift perfectly accommodates the machine economy. This is absolutely critical to understand. AI agents and massive compute clusters simply do not visit local bank branches. They do not wait for end-of-month invoicing to settle accounts. We live in an era of agent-to-agent and machine-to-machine economics, A2A and M2M. These automated, highly complex systems require a native API for value. Regulated digital dollars serve as the functional, global, single currency required for continuous, programmable microtransactions. This is how machines instantly buy compute power. This is how they access gated data globally. They stream fractions of a cent, thousands of times a second, autonomously. The legacy banking system physically cannot process this. Only native digital dollarization via public blockchains handles this machine economy at scale.
Section 3. The programmable compliance. This is the hard regulatory reality for digital dollars.
Now, as money moves directly to these non-custodial wallets, a very hard, unavoidable regulatory reality kicks in. You cannot have anonymous money flowing freely in the U.S. system. FDIC, FinCEN, and OFAC mandates explicitly dictate that programmable compliance is the absolute prerequisite for digital dollarization. Without it, the system does not launch. We are seeing a total shift away from the subjective human-driven compliance of legacy banks, where a compliance officer makes a judgment call. That is replaced entirely by hard, programmable data, hard-coded right at the network protocol level. For these digital dollars to legally flow on a global scale, the underlying network must possess definitive, undeniable enforcement mechanisms. Specifically, the network must have the technical, on-chain ability to block, freeze, and reject transactions based on active anti-money laundering and sanction screening. The rules are enforced by the code itself.
Section 4. Breaking the KYC silo. Let's look at the fatal flaw in our current identity models. When you actually try to implement this programmable compliance, you immediately run into a massive structural flaw in the way we handle identity right now. Currently, we operate in KYC silos. Every time a user interacts with a new platform, they have to pull out their physical passport or driver's license, take a selfie, and upload raw, highly sensitive identity documents over and over again. It is literally like being forced to show your physical ID at every single aisle of a grocery store just to put a box of cereal in your cart. It makes no sense. Bank A refuses to trust the verification done by Exchange B. They are totally disconnected. This redundant, siloed, manual verification process absolutely cannot scale. It completely breaks down in an ecosystem where billions of humans need to interact with billions of AI agents in real time. Establishing a unified, universally accepted, globally verified human identity layer is the ultimate bottleneck for the digital dollar. Until you solve the silo, you do not get the machine economy.
Section 5. The Human On-Chain Ledger. The PiVerify Solution. To resolve this exact bottleneck, a massive infrastructure solution has already been built and deployed. It is called PiVerify. PiVerify operates as a pre-built massive global supply chain that actively translates physical human identity, a real person holding a real ID, into an interoperable, compliant on-chain credential. How do they do this at a global scale? Through an incredibly sophisticated AI and human hybrid verification system. The AI engine processes all the standard, easily readable documents at massive scale, instantly. But then, for edge cases, for highly complex cultural naming formats, or incredibly specific local languages that confuse algorithms, the system routes the data to a network of over 1 million local, incentivized human validators. This hybrid engine has already successfully processed over 18.1 million verified humans across 200 distinct regions. And crucially, it operates on strict GDPR data minimization principles. The human validators never see your entire profile. They only review the exact tiny data slice necessary for verification. Maybe just checking if the face matches the photo, securing total user privacy while ensuring absolute network compliance.
Verifying a human is an incredible feat, but it's really only half the architecture. Once verified, the network requires heavy technical protocols to simultaneously protect the user's privacy and enforce the government's rules. This is where Protocol 25 and Protocol 26 come in. Protocol 25 utilizes zero-knowledge proofs. This is the privacy shield. It allows a user to mathematically prove their eligibility, for instance, proving they are a unique human and over the age of 18, without ever exposing the underlying raw data to the requesting application. You prove who you are without revealing who you are. Right alongside it, you have Protocol 26. This is the padlock. This acts as the essential, hard enforcement layer that fulfills those strict OFAC and FinCEN regulatory mandates we talked about earlier.
Let's look closer at how Protocol 26 executes this programmable compliance at the technical level. In standard legacy blockchains, if you identify a bad actor and freeze their address, they simply generate a brand new anonymous wallet in 2 seconds and keep operating. It is a game of whack-a-mole. Protocol 26 stops this completely. It utilizes frameworks like CAP77 to enable network-level account freezes. Because the Pi network directly connects one single verified human to one single on-chain account, an enforcement freeze targets the verified economic identity of the human being. It definitively prevents malicious re-entry into the system. You are locked out. Furthermore, Protocol 26 enables selective recovery. This is huge. It permits surgical interventions by authorities or network administrators to recover compromised funds or correct genuine proven KYC errors without breaking the immutability of the entire ledger. It is precision enforcement.
So, why does having a verified human on-chain ledger matter so much right now? Because we are aggressively entering the AI value explosion. We are in an era where AI agents and models are generating massive amounts of tokenized value every single second. But the system explicitly requires a verified human to actually capture and claim that value. This entire network draws on the foundational principles from Nicholas Kakalis's Deep Background in Human-Computer Interaction, or HCI, and his time at StartX. The network is fundamentally designed for seamless, frictionless user integration. Through incredibly intuitive interfaces like PiApp Studio and leveraging dialogue network adjacency, Verified everyday individuals instantly become the producers and the value capturers of this automated economy. This essentially forms the baseline for what we call universal basic intelligence. Your verified immutable on-chain identity is the exact mechanism that secures your financial participation in the AI era. No verification, no access to the value.
Section 6. The fourth IR is here. Let's conclude this grand unified theory.
When we step back and synthesize this entire macroeconomic shift, a razor-sharp timeline reveals itself. Look at the current events that are undeniably built and active right now. The Federal Reserve's 5 task forces are fully initiated and restructuring the OS. PiVerify is officially live for massive B2B integrations, already scaling well past 18.1 million verified unique humans. The Protocol 25 privacy frameworks and Protocol 26 enforcement layers are fully established and operational. Concurrently, because of these active foundations, future scenarios are actively unlocking as we speak. The Fed is rapidly shifting its entire operation to real-time AI modeling. Digital dollars are cementing themselves as the absolute standard for machine-to-machine economics. And PiVerify is firmly positioned as the default, unavoidable routing hub for global AML compliance and AI ecosystem access.
The conclusion here is absolute and factual. The fourth industrial revolution is not some distant, theoretical future concept that we are waiting for. It is deploying right now, today, across the global infrastructure. The Federal Reserve is actively retrofitting the economic operating system for the machine age. And that final, ultimate bottleneck, the need for a natively compliant, perfectly verified global human identity ledger, has been definitively solved by PiVerify. The digital dollarization of the global AI economy begins today. Thank you for joining this explainer.